Yeah, I'm losing my
Absolutely,
edge.
Pete. We are talking about spread trading here for day traders. Spreads, something that we've covered a lot here in this medium, and it's honestly, it might sound like a daunting title. You know, spread trading, or I'm gonna trade the spread between these two things. But I have a feeling that a lot of people watching will kind of their memory will get jogged that they already use this idea, whether
Hmm.
it is in how they assess football games or how they assess just the different prices of cereal at the grocery store. Spreads are everywhere, and it's simply the difference between two markets that kind of equates them. And whether you're talking about cereal or football, tonight you've got the Bears playing the Vikings, and I don't know what the line is, their spread is on that game. But it's probably like, let's say the Bears are +3. They're getting 3 points. That spread value, Pete, equates those two markets, the Bears and the Vikings. And so to bring them to even, the Bears get 3 points. And it's similar here with equity markets. Today, for the sake of our conversation and teaching day traders about spread trading, we're looking at STIX and SM75. Those are two small exchange stock products that we'd love for you to check out. They're great and new stock products here. But they're just going to be the two characters in today's stories. And you can see at the start of 2020 here, you had a STIX product that was at about $40, and you had an SM75 product that was at about $52, $53. And so at the start of the year, you would say that SM75 was plus 12 or plus 13, whatever it was. And now you fast forward to today, Pete, and you've got both of these markets at about 55. So now the spread is actually at 0 or unchanged. And so in this time, Pete, the spread has gone from SM75 over STIX plus 13, or STIX on top of SM75 minus 13, and it's gone to unchanged. And that's all to say what you can see in this chart, the white line, STIX, making up ground on the red line, SM75. So,
Right.
I know those are a lot of different ideas there, Pete, but they're actually the same idea, just conveyed in a bunch of different ways, right?
Well, absolutely. And you know what? I think you make a great point, is that you hear spread trading and it's like, okay, I got to put something else against it. And it's something that I don't necessarily trade or is difficult to track. And what I mean by that is, I got to tell you, when I trade traditional pairs trades in the institutional futures world, SPOOs against NASDAQ, sometimes we do SPOOs against Dow. The only way I can track whether I'm up or down
Yeah.
on those trades is by looking at my P&L. And you would think, oh, there's got to be a better way. Well, I'd be curious to see anyone try, because you could chart this a number of different ways, but never in a way where you can look at this chart and tell exactly when the difference between these was 13 points. That was $1,300. And you could do that math in 2 sentences. I don't know any equity index spread that affords you
Yeah.
that luxury. And that, for a lot of people, that's a lift. And you know what? I'm not frustrated, because I have gone through all the exercises trying to figure out an easier way to look at my NASDAQ SPOO trade, not to chart it for the reason of looking at, but how can I assign relative P&L on the fly? And the only way for me to do it is look at that, not look at the simple math. And I love this part about the dollar ticks and the simple math.
Absolutely. Yeah. And that is exclusive to these small exchange products. It is. We always joke about, going back to the sports analogy, it's like trying to create a spread between the Chicago Bears and the Chicago Cubs. It's like, one thing is priced in home runs and the other thing's priced in touchdowns and field goals. And that's, trading S&Ps versus Dow. You've got a Dow, which is, 5 digits. You've got an S&P 500, which is 4. And then it's like, how do you equate these things? And this is easy, both 2-digit indices that are, right now trading at unchanged. And to view that in a different way, this is literally like that spread value just plotted out, So instead of looking at the individual success of the Bears and the Vikings, it's just looking at the value of their difference and how that has changed over time. Maybe the Bears, they start out the year very, very hot, and so the spread is maybe -3. They have to give 3 points, and then they lose Mitchell Trubisky, they lose their quarterback or whatever, and then that spread.
I knew that.
Well, just the spread moves back and forth, right? And what you're seeing here in the white line is just the difference between these two markets as its own single value. And that is often, Pete, traded on its own here. And now hopefully you can grasp a little bit of what we're talking about. This difference, like we noted, starting out in 2020 at around minus 11 STIX over SM75, coming back to actually plus value, and then now sitting at unchanged. Though those long-term trends are intriguing, we talk about them constantly, and there has been a good trade around unchanged here if you've been selling everything north of unchanged and buying everything below that zero. But I do want to look at the intraday trade because, Pete, as recent as today, there's been a ton of movement between these two markets. And this is where spread trading meets sector rotation. And sector rotation is this term that you and I scoff at constantly because it's something that people say, but there's usually no action behind it. You're seeing a ton of sector rotation today into industrials
out of come up with a better reason, right?
Well, yeah, it's like, it's into industrials, out of technology, or the last few years, it's been out of industrials into technology. And it's like, okay, that's a cool fact. How do I trade that? How do I change my, my investments around, or how do I day trade this idea? And you can see this day trading, this intraday opportunity, like I said, as recent as just this morning until this afternoon, you've got STIX and SM75 both rising. And then SM75 continuing to rise as technology actually starts to underperform here. And this spread moved out by a full dollar, Pete, this morning. It's come back in. You see that two-sidedness in that spread that day traders are looking for at when they look at individual markets. The same things exist for these pairs markets. If you're looking at standard deviations for the STIX product individually, and you say, okay, it moves about 80 cents on a daily basis. So I'm looking for opportunity at below negative 80 cents or above positive 80 cents on an intraday basis. That's where I find opportunity. The same with the spread here. The spread value has daily standard deviations, and you can see here that it moves about 77 cents on either side. Or $77. And we just saw, like I said, today, a move outside of that spread value to $1, and then it came back. And so this is all to say that, spread trading is not as complex as it sounds. No. And it's an active way for you to trade that sector rotation that's often quoted in the media.